Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. Well, we made it to the end of the week, and what a week it was. It was in rally mode the whole week. And here we are today again, rally mode. Dow's up 700, Nasdaq's up 200. So what's going on? Why are we rallying? Well, sometimes the bear market rallies can be very strong. There are a lot of short covering. Everybody was on one side of the boat, and now they got to get it back to the other side of the boat. Eventually, I do think the shorts are going to come in, and they're going to squash this rally. But it's been powerful. It really has. I mean, all right. So we got a lot of things going on right now. We got the Nasdaq. It's down here at, well, it's 20-day. It's sitting right above it. And the SPY sitting right around its 50-day, and the Dow Jones is leading the way. It's up at the 200-day, and it's actually broken through that today. We'll see if that holds on. Now, I do expect the shorts are going to come back in and squash this rally. When you take a look at the Dow, I mean, we were down at the 28,000 level. Now we're at 33,000. I mean, the record high is at 36,000. If we continue, we could be at a record high in the next couple weeks. They're pushing this market higher, but I don't think it's going to work. I think there's a lot of problems. I don't think this market is going to continue to rally right now. I'm expecting a pullback. So far, I've been wrong on that. It's a strong rally. The short covering rallies are powerful. I think the shorts are going to come back in next week and push it back down. We'll see how that plays out. Now, the HYG is the junk bonds, right? And the junk bonds, they usually tell you which direction the market's going. They're just powering up. Somebody's buying these bonds that, well, they'll become worthless if these companies go out of business. But the junk bonds are just booming higher. The VIX, it's sitting right at its 200-day. I think we're going to bounce off here and go higher on the VIX. I think the market's going to come in next week. I think the VIX is going to go higher, but could continue the rally. We'll see how that plays out. Let's go over to the real estate market. Now, the real estate market, I was worried about this housing crisis, not enough affordable housing, but once again, I was reading this article on Yahoo. They say not to worry about that because, they have a solution now. You know what the solution is? Well, the headline was empty offices, the solution to the housing crisis. All right, so they're going to convert all these empty offices. Now, in New York City, office market, I mean, it's about half full, right? And that means the price has gone down by about 50% on office buildings. Now, who's holding all that paper? Well, that goes to the pension funds, right? And I don't think a lot of these office buildings are going to be making their payment. But that's already a $450 billion drop in the value of office buildings just in New York City, $450 billion. But what the plan is, it does crack me up a little bit, the plan's to convert these empty offices into, well, apartments, let's call it. Okay, and this is going to be the plan. It's going to solve the housing problem. Everyone's going to have a place to live. We're going to put millions of units onto the market, and that's going to give people a place to live, so we'll stop all the bidding wars. Well, I don't think it's going to work. I think it's a lot harder to convert office space into apartment space. It's just not set up for it. There's a lot of problems. It's expensive, but you know who they would say is going to pay for all this? Well, the government. They're going to give these subsidies. They're going to finance the projects. The government's going to make these projects fly. Now, when you turn these into apartments, people are going to have places to live. And that's going to look at apartments right now are coming on the market. There's already 1 million new units coming on, but if you do this program, then you got another 1 million coming on. Rents are already starting to drop in apartments. I don't know if you know that or not, but the rents are already starting to come down. But this is their plan. They also say that shopping malls are pretty empty because nobody's got money to spend. And Amazon, they just came out with earnings and, they were just terrible because nobody has money to spend. Nobody's buying stuff, even on Amazon. But the shopping malls, a lot of them are just, they're like ghost towns out there in certain parts of the country. Now they're talking about, we could convert these into low-cost housing for people so that they have places to live. Now maybe it'll work, maybe it won't. We'll see. That's the plan, though. The plan is to convert all these office buildings and then put them back on the market as apartments, and then people buy them, right? Okay, maybe it's a good idea, maybe it's not. Personally, I don't think that's where the inventory is going to be coming from. Why? Well, that's going to take years to convert these office buildings. It doesn't happen overnight. You can't just walk in and say, okay, hey, you take that office, you take that office, you take that office. Look at you all get to use this one bathroom in the center, and this is your new place to live. No, they got to build construction. They got to gut the floors. They got to redesign them. There's a lot of cost and a lot of time. I don't think it's the answer, but that's what the article says is going to happen. We'll see if that happens or not. I'm betting against it. It's too expensive and it's not practical. Now, these office buildings, I was talking to my accountant. My accountant has 2 clients, and they're trying, well, they got these office buildings, right? And these office buildings are half empty right now. So they cannot get them refinanced. Now, office buildings aren't financed with 30-year money. They're financed with 5 or 7-year money, and they have to refinance them every 5 or 7 years. What, 3% was no problem, but now it's 7%. They're having trouble getting the financing because the office building's half full, so they're not getting the rental income coming in. So no one wants to give them the loan. I mean, that makes pretty much sense, right? Loans are up at 7%, and the office is half full, so they can't refinance it. Well, they go, well, and my accountant's his name's Ken. They go, well, Ken, can I sell this? Can we put it on the market? Well, we can, but the price is so low right now. You owe more than we could sell it for. So, there's really not an alternative. He can't refinance it. He can't sell it. What's the alternative? Well, you give the keys back to the bank, back to whoever owns that mortgage. And a lot of these mortgages on these office buildings, well, they're owned by what? Pension funds. Pension funds are already in trouble. They're so underfunded. I did a talk on that just a while back. Pension funds are in lots and lots of trouble, but this is what's going to happen. Now, a lot of people say that, well, I talk about it, the housing market, right? I talk about it, that's going to go down 50%. 50%. And they go, Mike, that's not possible. It's completely impossible. Look, a lot of people don't understand this. Now, I'm a real estate broker, so I do have a little bit of information from the inside. Now, before we were going into the pandemic, back in 2019, the housing market was already starting to soften. It was already getting soft. It was starting to top out in certain areas, and it was starting to get soft, and it was starting to come down. Okay, now that's when interest rates were below 3%. Below 3%, right? It was already starting to soften. Well, then what happened? We got this pandemic. Okay, we got this pandemic, and we printed trillions and trillions and trillions of dollars, $6 trillion plus just in 2 years. We sent out these stimulus checks to people. We gave these PPP loans to people. The money is still flooding the marketplaces, right? And that money is what's sending stock market up and sending, well, we got inflation now. We got inflation. What a shock. You print $6 trillion and they're so surprised. They're surprised that inflation happened. Well, yeah, we got inflation. You go to the gas pump, inflation, right? Prices are high. Food, inflation, prices are high. Okay, so you got this inflation going now. Well, right. So the prices of these houses going into 2019, they were starting to soften. But what happened during the pandemic? They boomed. They went up 20% in 2020, 20% in 2021. So 40% just in 2 years, right? When they were starting to soften here. Okay, so yeah, you printed the money. Yeah, that pushes things up. But 40%. Could we come back to that place we were before? I say we can. Now, rates now are at 7%, not at 3%. They were starting to soften going into the pandemic at 3%, but now we're coming out of the pandemic at 7%. I say we're going to give that 40% back, and we're going to give more. Maybe 50% is a conservative estimate. We'll see how that plays out, but I don't think 50% is out of the question. I really don't. Now, I do want want to talk one more thing here before I go. I want to talk about the banking system. The banking system, right? All right, banks make me nervous, okay? They could bring this whole house of cards to its knees. The banking system could bring it all down. Now, banks, they just came out with earnings, and most of them, well, they showed record profits. Now, why do they have record profits? Well, it's because you put your money in the bank, right? And you get less than 1% interest is what they pay you. And then they go and just buy bonds at 4%. And they get 3% on the difference. Okay, so your deposits get 1, they get 4, they keep the 3% as part of their profits. What else did their profits go up with? Well, credit cards. Credit cards went up, at record high. People are using their credit cards because they don't have money. They don't have the money to pay for anything, so they have to put it on a credit card. Credit card is at a record level. Now, did those rates, what are those rates at? About 18 to 25%. So sometimes they take your 1% and then they get 18 to 25%. But that's not what makes me worried. Okay, that's all good for the bank, right? The bank is winning there. But here's the thing. You take the 4 largest banks. Now, this is very interesting. The 4 largest banks, let's go with Citigroup, Goldman Sachs, B of A, and JP Morgan. All right, the 4 largest banks. Now, what are their assets? Their assets are, well, $8 trillion combined. Okay, they're have $8 trillion in assets, right? Okay, so that's okay. And now that accounts all your deposits with them, all their money that's deposited. Well, what are they doing with that money? Well, they're betting. They're going to the casino and they're making bets. Now, the modern day casino is the stock market. They're taking that $8 trillion and they're making bets. Well, how much are they betting? All of it? Are they betting all $8 trillion? Nah, they wouldn't do that, would they? Maybe only 50%. Maybe they're only betting $4 trillion at the casino tables. Maybe that's what they're doing, and they still have $4 trillion of your money. No, that's not what they're doing. They're betting $178 trillion. That's what they're betting. They're leveraged to that extent. They have $8 trillion in assets, and they're betting $178 trillion. Now, these bets are what's called derivatives. They go to the markets, and they lever this $8 trillion out, and they bet $178 trillion. Now, if everything's going good, it all works out for them. But like we saw in Europe, what happened in Europe? Well, they had a problem. They had a problem because the interest rates were being risen so quick that these derivatives were falling apart, and then they had to reverse course and lower it. Look, we got big problems here when the banks have $8 trillion in net assets and they're betting $178 trillion. This could topple the whole house of cards, the housing market, the stock market. I mean, if one of these banks go down, they're all interrelated. It's going to be a house of cards. This is what keeps me up at night. This is what makes me worried. I don't like the banks. I don't trust the banks right now. Yeah, don't worry, Mike. My money's insured. They got that FDIC insurance. Let me tell you, they got 1%. The FDIC has 1% of your money. 1%. If 5% of the people go in, pull their money out, they don't have it. They do not have it. Yes, they will probably print it. The government will print it and make the money worth less and less, but you'll eventually probably get your money out. But how long will it take? 3, 6, 9 months for the government to print it and give you your money back? I don't know. I just don't trust the banks. I think this is a house of cards waiting to come down. I think that real estate market could be the leader on the way down. I think 50% might be conservative. Anyways, that's just all my opinion. I got carried away on a Friday, didn't I? I got carried away, but I hope you liked it. If you liked it, give me the thumbs up. Why not? It's Friday, but go out there, everybody. Have a great weekend. We'll talk again next week. Got some really interesting stuff coming up. We got earnings next week. We got the Fed coming out next week to talk. It's going to be fascinating. Give me that thumbs up. Bye-bye now.